Let me pause that. I'm very excited to be hosting this. And yeah, I can see a few people here on the Zoom. Thank you for joining. Today is going to be an awesome, awesome, awesome day. Trust me, many of you would look back and remember today as the day it all began to change. That's a promise. All right. So let me see. Let's get some feedback in the chat. If you can see me, if you can hear me, say hello, say hi, good afternoon, good morning, good evening, depending on where you are in the world. And then let me know what city you are joining from. Please, I'd like us to be interactive in this webinar. I would like to get live feedback. It's going to help me to communicate much more effectively. So let's get some chats, let's get some emojis, let's get some responses in the chat box. Let's get some responses in the chat box. Can you all hear me? Yeah, Alan is joining us from South Africa. Abayomi from Lagos. Awesome. And someone is joining on my screen. So let me just stop that. Okay. Okay, who else is here? We have Abayomi. I can see some people on the call. Just type hello. I want to know that we are together. This content you're about to learn, you're about to witness, or you're about to see is going to change your trading forever. I'm speaking from experience. I can see TechnoSpark 7. Let me know where you are joining from and maybe what your name is. We have a few other people on the line. Ronald Doji, I can see. Ayla Julius also on the line. You're all welcome. So without further ado, let's go right into today. Okay. So basically, it's the Learn to Trade workshop, and you are going to learn how you can make between $30 to $50 every day, trading only a few minutes per week. And that may sound far-fetched for a number of you, like, how is that possible? If I can even get $10 per day in this Naira economy, in this Nigerian economy, my life, if you think your life would drastically change if you could make just $10 a day from trading, type yes in the chat box. Type yes in the chat box. You know, I always tell people that you are only one information away from changing your life. Just one. Just one little bit of information that you are not aware of currently. All right. So please, if you have multiple devices, them off or set them to do not disturb. Eliminate distractions. This is midday, so it's actually busy, but just try as much as possible to eliminate distraction, and don't put your contact details in the chat box. Ask questions, and obviously, as I said, let's be more interactive. Who is this program for? Who is this workshop for? For professionals that don't have time to trade. So you are maybe an engineer, you are a lawyer, you are an accountant, you know, you're whatever you're doing, an entrepreneur, and you understand the benefits of trading, but you don't have time to trade. All right. The traditional way we've been taught how to trade is, you know, to block a period of time, a couple of hours, and say, okay, I'm trading morning session, I'm trading New York Open, I'm trading that, I'm trading that. All right. And the truth of the matter is we are all busy. We are busy hustling. All right. So we don't really have that time to sit down in front of the screen. And if you are in that same bucket, just type yes, because that's definitely, that was my main challenge actually. All right. So frustrated traders who are not making profits. If you've been blowing accounts, raise your hand. If you've been blowing accounts, raise your hand. If you've been losing money, making money this week, losing money, losing it the next week, making money for 3 months and losing it in the 4th month. All right, just raise your hand. Let's know ourselves. Okay, if you've lost trust in the industry, does this forex actually work? Does this trading actually work? Okay, and if you are here, maybe you are profitable, you are an expert, you know how to make money, but you're looking for a strategy that can be sustained. Okay, this webinar is for you. All right, so please pay very close attention. Olaiwala says hi from Lagos, and yes, you're saying yes to the fact that you're probably struggling with trading, and this webinar was designed for you. And the basic question I'm asking you is, who is going to guide you? Who is going to guide you? Yes, forex can be very profitable, is a profitable venture. It can change your life like it's changing mine and that of many other people you are going to get to meet. But you always need a guide to avoid the pitfalls, to avoid the scams, to avoid the mines, the bombs. You need a guide. All right. So who's going to guide you? So I am going to be presenting this webinar. My name is Adeposi Okupe. You may have seen me online, maybe, on Facebook, on YouTube, or you've attended any of my previous events. I'm the founder of the Personal Wealth Academy and also No Limits Markets. All right. And why should you listen to me? Okay, I'm a wealth crusader. Well, they call me wealth crusader because I talk about money a lot. I talk about money 24/7. Over the last decade of my life, I've spent my time investing, learning, experimenting, and just looking for how the average person can build wealth from scratch. I'm talking about you. How can you start with what you have? Maybe you were not born with a silver spoon, you didn't have all the opportunity, but how can you not only become financially free, but actually do it in record time? That's been my life mission. I have over 10 years, in fact, going to about 17 to 18 years in the financial markets, but when I really, really started getting serious, is about 10 years. Serial entrepreneur and also a personal finance and business expert. I've trained over 50,000 people across major cities in Africa, Nigeria, Ghana, South Africa, and Kenya, Uganda, and a few other countries. Okay, but life was not always like this. I was not always this certain. I was not always this confident about my financial future. All right. Not so long ago, I was still looking for how to basically just feed my family. It's not so long ago, you know. I can still remember the memories of not being able to buy the next meal and just trusting God that a miracle would happen. I still remember, my business crashing and having to go back to get a job after many years out of employment, just to put food on the table for my wife and kids. And what I teach is that you cannot put your financial future in the hands of any other person. You need to learn how to build wealth from scratch. And to do that, you need a sustainable plan. I'm not here to teach you how to moonshot, how to make 1 million in 6 days, or how to make 100x in 2 days. I'm giving you a sustainable plan that will make you free in 3 to 5 years if you follow exactly what I'm going to show you. And I'll show you my progress. I'll show you that of other people. You need a predictable system. Do you think the big institutions are joking with their money? Do you think they are gambling? Do you think they are hoping that it will work? They have a predictable system. They know exactly how much they are going to make, and they know exactly when they are going to rake in their profits. And they know exactly when they are going to take your money from the market. It's all predictable. I'm going to expose you to those concepts today. You need a reliable platform. We're going to talk about platforms today, and you need the right psychology. You can get everything right. You can have the right plan, the right system, the right platform. But if your mindset is wrong, you are going to miss out. All right. A mentor of mine told me, he said, you can be in the right place at the right time with the right people and in front of the right opportunity. But if you do nothing about it, it is as if you were never there in the first place. That's so powerful. I learned that over 10 years ago. So get your psychology right. Even on this webinar, get your psychology right. A little bit of information can change your life. And I believe no one is smarter than you. I'm not smarter than you. I can't manage your money better than you can. I'm only going to show you what I'm doing and give you the opportunity to do the same thing. So what is my pain? What is my pain? I believe that we are being hindered by institutions, the financial institutions, the big dogs that prey on us with their greed and lack of empathy. I believe the institutions are not out there to help you. Your bank is not out there to help you. The hedge funds are not out there to help you. Your financial managers are not out there to help you. They are out there to make money for themselves. If you agree with what I'm saying, type yes. Type yes, type yes, type yes. I want to get feedback. These guys will keep your money. They will charge you outrageous fees and they will give you kobos. They will give you cents as interest and you will still be happy. You put your money in the bank and they will give you 6% in a year, right? And you'll be happy. Then on top of that, the government will tax you and then you have over 30% inflation in Nigeria right now, year on year. If you come to food, it's actually about 200% inflation. So what do you want to do with 6%? Even if you make 50% a year in Nigeria, what do you want to do with that? When you're having over 200% inflation, there has to be a better way. All right. So most times you are not actually going forward, you are going backward. If you can relate to this, type yes. I can see Abayomi says yes. Olaiwala, do you relate with this? And large Julius, do you relate with this? Let me know in the chat. Okay. So at the end of this program, as I say, if you put on the right mindset and psychology, you need to be able to know who and what you are going to become. I'm not here to waste my time. I'm not here to waste your time. Okay. There has to be a predictable. I have an assignment. I have a mission. There's a reason why I'm doing this. All right. So at the end of this course, you will become a smart money manager. When I say smart money manager, what does that mean? I mean, you can take 100% control of your finances. If your financial future is so important, why would you hand it over to a third party to manage? Worst still, that third party, that institution is not even obligated to act in your best interest. They prioritize their profit first and then give you compensation for your time. So I want to show you how you can begin to manage your money by yourself and outperform those institutions. I'm going to talk figures and I'm not going to, this is not theory, this is a practical session. You will become a confident trader. Maybe that's what you want to be. Anytime you place a trade, your heart is already going up and down. No. After this course, when you place a trade, you can go to bed. You can go and work. You can continue your life, and trading does not have to impact your lifestyle. And you can still make more money than other people. For some of us, it's just so that we can take care of our families, become a family provider. Or if you're not married, to become a self-provider. Okay? Put food on the table, have a good lifestyle, and just become an all-round success. All right? Now, I want to play a very short video. But before I play it, I want to talk about this gentleman you're seeing on the screen. I've been trading for a very long time, okay, about 18 years to be precise, but I was not always profitable. Okay, so I met Alan about 10 years ago doing something entirely different. And then after a couple of years, we became close and he eventually showed me what I'm about to show you. So the credit for this strategy goes to Alan because he saved me from the experience that many of you may be experiencing right now. But Alan is in South Africa, right? A big brother. And in fact, we are working together to shed this light across Africa and show people that they can actually make it in trading. Now, the video you're about to watch is actually Alan interviewing one of his students, okay, who is a woman, And just in 1 minute, it's going to show you the kind of results that is possible when you put your head down, follow what I'm about to teach you, and apply it. All right, so let's watch the video and I'll be back to continue the Zoom.
If you're looking for a Forex mentor, then you need to find a person that has got real testimonials of success. Listen to what one of my clients have to say, then take action. Okay, Samani, welcome. Thanks for your time. I really appreciate you doing this. I know it is off, not scripted. So just tell everybody who you are and what you do and where you're from.
Awesome. Thank you so much, Alan. I really appreciate this. So, guys, my name is Marnie. I'm a mom with 4 kids, and I've been married now for 12 years, so it's awesome. But about 3 months ago, I saw one of Alan's ads about 3 months ago on my YouTube, and I decided, you know what, I've been losing in Forex for over 4 years. So I've lost close to about 150,000 Rand with fake courses and fake things. And I thought, okay, you know what, let me give this guy a go. And then he introduced me to the strategy. And I thought, no, I don't know if this is going to work because people scared me. But I decided to take it. And I actually took an account with $100. And I started trading his strategy. And I just kept on trading it for 3 months. And I literally tripled my account in 3 months. So I was doing 100% every single month. And I'm no expert trader. I haven't been doing it for years. I simply followed the strategy and it works. If you just follow the strategy, work on your psychology, you will succeed. And I cannot tell you how much I'm thankful to Alan for actually changing my life, creating and giving me the reality that I can be a successful trader. And the best part of it all is I get to be a permanent stay-at-home mom, take care of my kids, run errands, run all over the place, and I get to trade in between it. So it's absolutely amazing. Thank you so much, Alan, for everything that you've done for me and my family.
Pleasure. Well, it's an awesome testimonial. I really
Awesome.
appreciate
You can hear that
you
testimonial.
telling us your story.
I know Manny personally. All right, I've gotten to meet Manny in the traders community, and she's an absolute beast when it comes to execution. But just shows you what is possible she joined. This was like July or August last year that she started trading, and she was able to create those results. All right. Okay.
If you look,
let's go ahead. There are also some other results here. I just want to show. I took these screenshots from our group, but and I've hidden some of the names because we didn't get I didn't get permission of those guys to publish, but I just want to show you the statistics of what's possible. So you can see this is one account here. This person started with a balance of 200 and deposit of this, right? And you can see the profit. Like how many percent profit is that going to be? If you can grow your account by this much, maybe over 2 years, over 3 years, how will your life change? Okay. This is from a Nigerian, actually. This is Abioye. This is Abioye saying your strategy is working perfectly. It happens to be the type of strategy I've been searching for years. It works in both a bull and bear market. It's a superior strategy. Well done, from Atkins Abioye. All right. So that's Atkins. This is somebody else who is both using our EA. All right. For those who are interested in EA, we can talk about that later. But majorly on the manual trading, you can see the return over 1 year. Can you see this? 366 days. This is a live statistics report screenshot. I will show you how we get that. And you can see the return. This is a 13.6% return every month. What would you do if you get 13.6 and you know that you can't blow your account? All right. So that's somebody's account. This is another person. These are different people. Different people. I just took screenshots of their testimonials from our group. This person has made over the last 90 days, can you see it? Real account. The person started with $1,000 mostly, or most likely, and he has made 33%. That's what you're seeing here, $333. Can you see that? Net profit, see the profit, see the loss. over 90 days. So this person is making about 10.1% per month. All right. So when I tell you you can do 10% a month, it's statistics. You can actually do more than that, but that's the conservative statistics that we are seeing from our students. Okay. So let's go ahead. So what is actually the problem? Why are you not making money? The problem is that why you're not making money and why you're not profitable is that most times you are actually not trading and you are gambling. Some of you can actually just confess now. Confess in the chat if you've actually been trading, if what you think you're doing, do you think you have been trading or do you think you have been gambling? If you think you have been trading, type trading. If you think you have been gambling, type gambling. Because when you are gambling, you don't even know the outcome. You are hoping. When you put a trade and you are hoping that you will come out profitable, my brother, you are gambling. All right? You are gambling. So, realistically speaking, when you are coming on this kind of plan, don't expect to, make $1 million in your first month. And this is one of the things that makes a lot of people, lose money. All right. When you start out a program like this, even when you start trading, when you start learning a new strategy, it is normal for you to actually have a little bit of drawdown. That's what we call it, drawdown. It's operating loss. You will still make all the money back with profit. But at the beginning, give yourself some time. Don't put yourself under pressure to start making money and withdrawing money. Focus on perfecting the system. Because I'm going to show you the power of compound interest and how it will change your entire trading journey when you understand what I'm about to show you. When you give it a bit of a time, all right, you may have a fixed expense. Maybe it's the capital you put in. Maybe you are paying for a mentorship. Whatever it is, you have a cost like that. And then your trading account goes a bit like that while you are learning. And after a while, it starts to go up. And you can see this trend is not just a shallow trend. It's a steep slope, almost like a parabola. If this thing keeps going, it will become almost like a straight line and just go vertically up. That is realistic. It's predictable with what I'm about to show you. All right? Because we are going to be working with compound interest. Albert Einstein says compound interest is the eighth wonder of the world. He that understands it earns it, and he that doesn't pays it. So compound interest is what we are going to be leveraging, and it's time. If you can make 10%, 10%, 10% over 2 years, 3 years, 5 years, 10 years, you can change your entire family's experience. All right. So I see some people are saying gambling. Olaiwala says he's been gambling. All right. This is my personal result. This is independently audited. I will show you on the website. All right. Live. FX Blue is our statistics monitoring website. So we plug our trading account to FX Blue, and we are able to see, our trading history, and they represent it graphically, and they also give us the statistics. So there are two basic accounts that I trade. These are my own personal accounts with my own money. And the first one is about maybe 8 months. Is it 8 months now? From July, end of July last year was when I started this account. All right. And I've made 183%. That is 13.5% every month. Every month. Come rain, come shine. Bull market, bear market. Naira goes up, Naira goes down. What if there was a place that that come rain, come shine, Tinubu enter, Tinubu goes out. Whatever happens, election cycle, whether Trump wins or not, whether there's war or not, whether the market is crashing or not, whether Bitcoin is going up or not, you are making 13.5. How would that change your life? This is 243 days, about 8 months. My second account, I've actually done better. 22.2. This is me trading on my phone right here. My iPhone. I don't know if you can see my iPhone. Right here. my MT4 account. Okay, so I'm going to show you. If you would like to have this kind of results, type yes. Don't type yes, type money, type money. If you like to have this kind of result, type money, type money in the chat. All right, type money. Let me see. So expectations, get ready to have a jam-packed session, and then we'll talk about our mentorship program at the end. For those of you who are serious, this is not for play. This is not for this is child's play. In fact, we don't use demo. Just be ready. I'm telling you upfront. I don't allow my students to trade with demo because you don't take it seriously. I need you to start learning the right psychology and emotional management from day one. But I'll show you how to trade with the lowest risk possible, that it is impossible to blow your account, except you are not following what we are telling you. It's impossible. All right. So you're going to love this. Get a book, get a pen, and start jotting. Okay. So let's go on. I can see some people saying money. Yes. Bright says money. Don Kenny says money. Olaiwola says money. Abayomi says money. Awesome. Awesome. We're going to show you how to get the money. So what does Warren Buffett say? He says risk is for those that don't understand. Trading is risky. Forex is risky. Yes, it's because you don't understand it. It's because you've been gambling. That's why the people that are profiting from the market is just business. It's just business to them. All right. Business has risk, but there are ways to mitigate those risks once you have knowledge. Once you know what is actually happening in the market, then you can begin to profit from it. So Forex is simple, but it's not easy because your emotions get in the way. All right. It's simple. It's just not easy. Why do I say that? Has anybody ever heard this before? That if you need to be successful in trading, you need to trade without your emotion. Has anybody heard that before? That you need to remove your emotion from trading so that you can follow your rules. It's not, if you remove your emotions, you're not a human being anymore. It's not possible. I'm going to show you, your emotions are actually your guide. Your emotions are your constraint. It's because we are trading the wrong way against the market. That's why we've been missing it. So you are going to learn how to use your emotions, and I'll show you. When it comes to risk management, your emotion is what tells you where your threshold is. So if your emotion has been all over the place, it's because you are trading incorrect lot sizes. You are using excessive risk. If you bring your lot sizes down, you size your account properly, use the proper leverage, your emotions will be in check. So your emotions are actually your insurance. It's your guide. All right. I'm going to post this in the chat now. There's a Discord group that you can join for free if you want to, keep in touch with us, and also a Telegram group. I'm going to post this in the chat. So just take note of it, maybe copy it and paste it somewhere so that later on you can join. So you follow the Telegram, I will put in announcements and all those things on that platform. Okay. I hope you guys are enjoying the session already. I hope you are learning something already. I hope you're at least getting inspired. Okay, so timing is everything. I don't trade on 5 minutes. I don't scalp on my main account. So make this money I'm showing you. I don't scalp, I don't day trade. I don't have the time. I'm running my business. I have at least 4 businesses I'm running at the same time. I'm an architect. I have my personal finance and wealth practice, that I'm running. My wife and I run a leather manufacturing company where we make bags, and all that. This is one of our products. So we run, see, there are plenty in the house, all right? These are all our handmade products in Lagos. So I don't have time to sit down and trade, but I'm exposed to the market. I know what is possible there. So what do? I trade on the 4-hour. So let me share my screen. Let me share my screen with us. Okay. Oh, let me share my phone screen with us so that you can see. Okay. iPhone, got to behave yourself now. Got to behave. My computer is excited, so okay. I decided not. Hold on. Okay, I can't get this to come up. I'll try again. I'll keep trying. If it works out. I'm supposed to. Oh, yeah. There we are. There we go. There we go. So this is my iPhone. Here, I trade on the 4-hour chart. I trade on the 4-hour chart. Okay. And guess what? If I'm trading on the 4-hour chart, how many times a day do I need to check my chart? How many times a day does a new 4-hour candle come? And someone type in the chat. If I'm trading on the 4-hour chart, how many candles am I going to have in one day, 24 hours? I want to know if you are following me. How many candles will I have in a day if I'm trading on the 4-hour chart? How many candles will I have in a day if we're trading on the 4-hour chart? Uh, just paste this here. Okay. Don says 6 candles. Olaiwala said 3 candles. Brian says 6 candles. If you have each candle is 4 hours, that means you need to have 6 candles in a day. 6 times 4 is 24. All right. So Olaiwala is not 3. If it's 3 candles, that means you are going to need 8-hour candles. 8 hours. So if every 4 hours, if I start by 12 midnight, the next candle will be 4 a.m., 8 a.m., 12 noon, 4 p.m., and then the last one will be 8 p.m. So 6. So guess what? How many times do I need to check my phone in a day? 6. Maximum of 6. Sometimes, obviously, I don't wake up. Sometimes I wake up and I check, but maximum of 6 times. And every time I'm checking my phone, I don't check. In less than 10 seconds, I know exactly what I want to do. Just like what is happening on the chart now. After this class, some of you will be able to take a trade. After this class, some of you will be able to take a trade. So timing is important. If you're able to trade this way, every time you open your phone, you don't need more than 15 minutes or 15 seconds, or let's even say max 1 minute to look at your phone, and you check your phone 6 times a day. That means you've used 6 minutes on your phone. It doesn't need to affect your life. Every 4 hours, you check your phone, set an alarm. All right. Set an alarm. And you keep a journal. That's it. Trading does not need to be harder than this. Okay. So for most of us, we've been trained to risk 30 pips to make 15 pips. And that's why we keep losing our money. So this is my phone. They'll tell you, oh, okay, it's going up now. It's going up. Let me zoom in. Oh, it looks like the market is going up. Let me quickly make 30 pips. I want to show you why we don't use a stop loss. So market is here. So let me look for 30 pips. All right. From this, my red line, if you can see my screen, 30 pips is somewhere. If you can see at the top of, I'm going to take a screenshot and show you. This is actually 35 coming. Well, that's 40, but let me just use it like that. So if you look at the top here, oh, I got it perfect. At the top here, if you remove one of the decimals, that's how you get the pips. So this is 315 points. But if you remove the last decimal, just around it one decimal, this is 31 pips. All right. So just wanted to show you. So if you check at the top of the screen, you'll be able to see right up here, this place. You can see how many pips it is. So we're looking for 30 pips. So let's put it right. Let's just leave it there. That's where I want my trade to get to. All right. So let me move my, when I enter, and then you now say, oh, sorry, that's risk, rather. Risk 30 pips. So let me take it down, something like that. And you want to make 15 pips. Where's 15 pips? Something like this. But guess what happens? The market, see how the market is moving. The market can entirely just come back here, just say, as it's retracing now, to come down, and then take out your stop loss, and then go back up to the place that you wanted to hit before. How many of you have experienced that before? You put your trade, it was making sense. And all of a sudden, the market decided to do, what will I call it? It started to do Ojoro. I think it's Ojoro we'll call it. It started to do Ojoro. It came down, took your stop loss, and then went up. That's exactly the experience of 95% of traders. It's because you are trading against the big boys. Imagine that maybe your friend, let me say you have a friend, you have a babe or a girlfriend, and you are trying to protect her. And they say, she say, there's some people trying to take my bag, trying to take my, they say, where are they? Where are they? Where are they? I'm gonna deal with them. How dare him? Who gave him the right? He said, they're in that compound. You enter the compound. You bust it, you bust you bust into the compound. And then you see these people with where their hand is bigger than your whole body. You see like Okogan. You see Yokozuna in one place. You see the rock in one place. All right. What are you going to do? Sense, eh? Wisdom will teach you that, Oga, this fight is not your fight. Just use wisdom to calm your wife down and try to avoid these people. The other thing you can do is try to be in their favor so that they can protect you and you can ride upon their protection. So when it comes to the market, you need to learn how to trade in the direction of the institutions. The institutions are the ones moving the market. And if you can learn how these guys are trading and know exactly where they are going, then you will not be, that's why we don't use a stop loss. The institutions know you put your stop loss there. So they will reduce the price because they are the one moving the market. They reduce the price, take out all your stop loss, which is exactly what happened here. Right here, this place is called a liquidity sweep. Most of you would have put your trade right here. It's going up. It's going up. It's going up. And then what will happen is they would drop the market. And you put your stop loss under this place, right? They'll take it down. They say, it's going down, it's going down. Let me sell, let me sell. You sell and the market reverses. Or You've bought, you put your stop loss here, they push it down, they take out your stop loss, and the thing starts going up. And you're like, it's as if they are watching you. That's because you are trading the wrong way. You don't risk 30 pips to make 15 pips. You don't risk two against one. So the secret of professional traders is hedge trading, which I'm going to explain to you today. Hedge trading, and we don't use a stop loss when we are hedge trading. This is how you can trade without a stop. I've stopped using stop losses for a long time. I don't use a take profit. I don't use a stop loss. Why will you use a take profit? Only to do your 15 pip target, and then the market is still going 1,000 pips. What would you do if you were here? You took a trade right here. You took your 20 pips, and the market actually dropped. The market dropped how many pips from year to year? That is where I would have gotten out. This is about 580 pips. But you took 30 and you're happy. And you're saying it's not profitable. You're not trading like the institutions. Can you see that? So I'll teach you how to hedge trade. What is hedge trading? What is dollar cost averaging? Okay. So let me give you an instance now. Let me demonstrate hedge trading to you. Let me open this, a test account I just opened for the sake of these trainings. Okay, so this is a new account. This is a fresh account. I funded it, and I want to show you what hedge trading is. All right, so let's assume I think the market is going up, right? This is a 15-minute chart. I think the market is going up, right? So I buy. Say, all right, I want to buy. Let's just say 0.01. So I buy, just the way we buy. And guess what happens? The market is going against me. It's reversing. What am I going to do? This market may actually go up, but we'll see where it goes in this class, by the end of the class. So the market is going against my favor. What do you guys do when you see something being red? Ah, it's red. I want to close it. Or it's blue. Why are you in a hurry to close the trade? Why are you in a hurry? Your psychology is wrong. You want to withdraw money to go and eat. All right, I'll talk about that later. But, give your trades room. The insurance we have, if the trade is going against me and I've discovered that, all right, I think I don't want to, where you put your stop loss. Let's assume I wanted to put a stop loss before, where you put a stop loss of 30 pips. Let me see now. So this is 27, this is 30 pips, somewhere here. So what I would do, instead of putting a stop loss, is I will put a pending order. So let's assume the market is turning against me, just like it's doing now. The market is going down and I'm scared. I don't want to lose my money. No worries, no stress. I will put a sell in the opposite direction. All right. So, and I will explain to you how that happens. So let me just enter a sell. Let's assume the market is going against me and I just sell. I want to illustrate this to you. So what's going to happen is that your profit and loss is going to be fixed. All right. It's not going to, whether the market goes up or I think I put it too close, but I'm going to illustrate to you that it's just going to be hovering around this $1. It will be hovering around this $1. It cannot go to, no matter where the market goes. If the market decides to go up, what will happen is that the buy will be in profit and the sell will be in loss. If the market decides to go down, that means the sell will be in profit and the buy will be in loss. So all I need to do is I need to now calm down and assess myself. If the market decides to go down, like that, I will ride my sell all the way down. And when I confirm that the market is now trying to go back up, I will close the sell in a profit and then open another buy and ride the trend up. That's hedge trading. All right. And if we have the opportunity, I'll do it while we are on the call. Okay. Let me remove all this. All right. So hedge trading makes your trading to be at ease. You can see that the market is coming down now. So one of those trades should go to blue. If the market is going down, my sell should actually become profitable. All right. Then once the spread goes under. So let's go on. We'll be monitoring this as we are going. I can leave this for 100 years on my own particular broker. I can leave this for 100 years and the profit will not increase, the loss will not increase. It's just be like that. So why are you losing? Why are you deciding to give your money to the broker when you can do this? If it goes against you, open a hedge. The only caveat is that the hedge must be equal lot size. Equal lot size. So if I open 0.01, I must open 0.01 on the other so that it is balanced. If I've opened 5 trades in a buy and I want to hedge, I will add up all the 5 trades and I will open 0.05, for instance. So that sell will counter all the buys. So my account will be, I can go on holiday. If I'm stressed, I can just take a break, come back in another week, market would have moved one direction. It will either go up or go down. There's no two ways about it. And then you can navigate from there. So I believe we get an idea. We're getting an idea about how hedge trading works. Okay. Someone is complaining about the audio. Let me see. Abdul Qadir. You should be able to hear, increase your audio, your volume, or maybe exit and come back. All right. So what is DCA? Dollar cost averaging is a strategy to manage price risk. Dollar cost averaging is a strategy to manage. For example, you want to buy something, but you don't know if I'm buying at the right price. I want to use 1 million naira to buy gold. I say, okay, if I buy 1 million naira, gold goes down, then I'm in a loss, kind of. I didn't get a good bargain. So instead of exposing all your capital to that asset at once, what you do is that you say, all right, I'll split my 1 million naira into 12 months. And I'll be buying 100,000 in January, 100,000 in February, 100,000 in March, 100,000 in April, all the way to December. So that no matter how price goes up and down over the span of that year, I would have had the average price, average entry price. So it's an investment strategy. Is an institutional trading strategy. If you give your money to a financial advisor, they will most likely recommend you do this. If you come to me, to my personal wealth academy, I will recommend you also do this, because I will tell you, take a fixed, if you don't have all the capital, take a percentage of your income, if it's $100 per month, and be funding your account. It's the same thing. So instead of purchasing the shares at a single price, with dollar cost averaging, you buy in smaller amounts at regular intervals, regardless of the price. If it goes up, you buy. If it comes down, you buy. If it goes up, you buy. If it comes down, you buy. But over a period, it will give you the average entry price. That's what dollar cost averaging is about. Okay, so let me show you what dollar cost averaging looks like on the chart. You can already see that our sell is in profit. Why? Because the trade is going down. Can you see that? The trade is going down. So our sell is in profit. But can you see the profit and loss is still $1? Most of us would have closed the trade in loss and would have lost this 1.5 here. You see that? So you have no reason to be closing trades in a loss once you understand this. So, but I want to show you hedge trading. Let's go to a monthly chart. I want to show you this is a monthly chart. Just as an example, right? Let me use this. Okay. Nice zoom. Let's do something like this. Okay, so I'll take a screenshot, bring it here. So what is the strategy in dollar cost average? That's what I want to explain. So let's assume this is January, right? Month 1. You want to start investing. What do? You enter the market. Immediately you entered, you were unlucky. The market went down that month. So that means that your trade is negative. Are you following? If you are following me, say yes, please. Let me know that I still have the class. All right. Let me know that I still have the class. If you are following, say yes, I'm following. Say yes. Okay. So the first month you bought, the price went down. You are investing. Like, this is why people lose money in investing. Stocks, gold, Bitcoin, whatever it is. But because you are dollar cost averaging, remember, you're 1 million now, you split it, you're now doing 100,000 every month. So month 2, what do? You buy $100, 100,000 naira. What happened in month 2? The market went down. Month 3, the market went down. Month 4, the market went down. Month 5, the market went down. Month 6, market went down. Month 7, can you see that you are in loss? It's as if they plan for you, right? Month 7, market went down. Let's assume that month 8, this is month 8, the market went what? Up in month 8. As at this time here, the market is up. Do you know that your month 8 and your month 7 are now in profit? Well, you have not finished. You are still investing, right? You are still investing. So you continue. Month 9, the market dropped. Month 10, the market dropped. You can continue this for 2 years. But one day, this market will start going up. When you get to month 11, what happens? The market started going up and all these bottom trades are in profit. Month 12, can you see what dollar cost averaging is? Month 12, the market still went up, but your month 5, that was in negative before, but you didn't close the trade, you didn't sell it, is now positive. Month 13, all right, can you see how it goes? And I couldn't capture this in my chart, but the price actually kept going up like that, like that, like that. So at the end of the day, what will happen is month 13, this and this are in profit. Month 14, month 15. As at month 15, all your trades are in profit. This is what we call dollar cost averaging. At this point, you can close the trade, banking your profits, because when the trade was going down, you didn't sell. You followed it. You followed it because you know how to hedge now. You followed it down. And then as it's going up, you now started entering. You were actually buying. You were entering you were entering. You were not trying to wait. When is the bottom? You were just entering the market. At some point, you are going to be in profit overall. At some point in month 13, you could have even closed all these ones that are in profit and keep riding the trend up. At least close these ones, right, that were negative before and now in profit. So that's dollar cost. Are we getting it? Does this make sense to us? If you start trading, I'll show you how we trade with this. Okay. So when you hedge trade, no more losing trades. We don't use a stop loss. If the trade goes against us, the trade is still dancing. The trade is still dancing in the middle. All right. So can you see that the market actually came down? So it's actually going down. The market is going down. All right. If it goes against us, we hedge and we make money going down. When the market changes its mind and starts going up, we buy at the bottom and we ride it up and we wait for this one to come into profit. Very stressless trading. Increase your profit line. We don't use a take profit. We wait until the trend is exhausted. When the trend is exhausted, then let's assume the trend is exhausted here. Let's say I bought at the bottom here, somewhere here, and I'm seeing that this trend is exhausted. Then I will take my profits. Why will you stop your profit at my 2 when you are still going to Badagry? Huh? These are the reasons why we struggle. You enjoy the full length of the trend, which is an average 200 to 400 pips. Let me show you. Recently, I closed a trade recently. It was like 600 pips because gold has been spiking crazily because of the war and all those things. So if you make an average trade on the 4-hour, like we do, should be netting 200 to 400 pips. What's this? This is 700 pips. This is 500 pips. From here to here, 500 pips. Imagine you entered here. Let's assume you actually entered down here. And then you exited right here. How many pips is that? If you can see it at the top right here. You exited here, 280. If I was in this trade, I'll be looking to exit anytime from here. So provide the full length of the trade, and you can do this in and out, in and out, in and out. I should be charging you guys for this. It's predictable, it's dependable, and it builds confidence. All right. So let's go ahead. I'm going to teach you this strategy. It's called the 8 EMA strategy. This is what I learned from Alan. All right. And I've practiced, and it works. I've shown you testimonial of people, it works. The entries and exits on this strategy is about 85% accurate. On entries, like I say, it's going up. 85% of the time is going up. All right. And you want to be that's the edge we have, that before other people's signals kick in, we have already entered. And because we are following the money. Okay. So before I show you the strategy, it's very important to be on the right broker. At the end of this session, I will give you guys chance to join our group so that you can I'll give you a step-by-step on how to sign up with the right broker. And don't just rush and go and open FBS. There is a particular way you must open the account, and there's a particular type of account you must open so that you can get the lowest risk. And if you just go to FBS like that, you won't see that account. You won't even see it on the website. It's only because we have some special relationship as partners with FBS. That's why they are giving you that opportunity. So who you know is important. If you are joining FBS through me or through us, we're going to give you access to what we call a cent account. Cent account. Cent account. $1 is 100 cents. What the cent account does is that it makes you exposed to the lowest possible risk. So even while you are learning, if you make mistake, 100 pips, it won't wipe your account. 100 pips on a cent account at 0.01 lot size is just $1 that you are in negative. 100 pips, it will be just $1 minus. All right, can you see what I'm saying? So you have time to learn, and when you are now comfortable, you can start increasing your lot sizes until the point where your emotion tells you, bros, you don't do. You know that that's your limit. So why do I use FBS? They are used by over 28 million traders worldwide. 14 years plus in the industry, FSC regulated. If something happens to your money, if something happens to your trade, if you send them a message, they will respond. It's impossible they won't respond. They will fix it because they are regulated. There is an ombudsman in Cyprus, like the referee in the forex market, that regulates them. If they something happens to you and you report to those guys can query FBS and withdraw their license. So they don't even want to hear anything about reporting or complaining. If there's an issue with your account, they will investigate it. And because I have direct line to their management and direct line for priority support, I can also help you with those cases. There are instances where we saw a glitch in the market, a spike, a spike or whatever they call it, sweep. And we reported, we sent them an email and they reversed the account. We have that relationship. So I remember I told you about platform. There's a reason why I'm here. After 18 years in the industry, there's a reason why I'm here. So don't take this lightly. The other thing about FBS is no swap fees. So if I show you my account, why did I say I can open this account? I can leave this account for 100 years, all right? Because no swap fees, no taxes, no charges. If you tell somebody you're hedge trading outside, they'll say, you want to waste all your money on fees. It's because they don't have access to the relationship we have. So when you sign up, I'll show you how to get the swap fee removed and confirmed by the broker. Not just remove, but confirmed. That means they are committed to it. Like if you see any charge there, so I can keep this here. Let me show you my main account. I don't want to show you so that I don't want to show you everything so that you won't have heart issue. So look at this trade. This trade, can you see my trades? This trade, I was showing somebody my account head trade from Saturday, and I opened these two trades. So it's just there. One will go up, one will come down. This Bitcoin here, but it's gold I trade. I opened this trade 25th of September. Can you see that? 25th of September, 5:30. No swap fee, no tax. This is 6 months now, 7 months now. See all the trades. No swap fee, no tax. No swap fee, no tax. So you have time, and somebody's like, why am I not closing my buy? See blue, 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 blue. It's because I'm hedged. I'm hedged. So I sum up all these sales and I open buys in the up. So this is trading. All right. And then we manage the positions. So I'm going to explain drawdown to us, and I'll show you why you need to begin to trade this way. So your next steps is going to be to open an FBS account, swap fee removal. I will show you how to download and set up MT4 on your phone like I have. Set up the moving averages, which I'm going to show you next. This is a major strategy. And then how to do your account so you can begin to see your reports the way I'm doing. The way I can see my reports, you can begin to see your own account like that. Can you see that? 356%. So you can actually begin to see your own results this way. So I'll show you how to set up FX Blue, and so you can monitor your progress. And then you also join the community. Okay, so let me explain before I go on, because somebody here is thinking, I just saw red on your account. Why is the red open? All right, I know there's somebody asking that question. Why is the red open? So let me explain this. This will liberate some of you. This will liberate some of you totally. Now, there's something we call drawdown. Drawdown. This red, this Bitcoin, this trade I have open here is in negative, but I've not closed it. It is what we call drawdown. It is unrealized loss. It only becomes a loss when I close the trade. And what I'm saying is, I know that even though this trade has gone down, eventually it's going to turn around and go up. So when I know that it's going up, I can close my buy and begin to ride this one. This one will start reducing and it will eventually become profitable. But for the moment that it is on now, you will have something called drawdown. If this bar in your MT4 is red, it means you are in a drawdown, an open drawdown. But you don't have to panic because you have knowledge. You shouldn't be focusing on this screen. You should be focusing on this screen. If you are focusing on this screen, you are not trading, you are gambling. You want to quickly close it. No, calm down. Focus here. All right. So I'm in a sell and the sell is profitable. This sell is profitable. Can you see this? By the time I confirm that the trend wants to change and start going up, then I'll close my sell. You can see this buy. His buy is currently negative, 3.53. The market is under it. So I've been waiting for that buy. I've been waiting for it. The market dropped under. I've been waiting for it. I know that it's coming back, but some of us would have closed the buy. So when the market goes up, guess what? I will ride the trend up again. Why did I miss this opportunity? I should have closed somewhere here, but I was busy. I was busy. I'm managing a construction project and I was busy. So when I came, I said that, it has come down anyway, no problem. I would wait for it to come back. All right. So I wanted to explain drawdown. You need to think of forex trading as a business. If you want to trade like the institutions, you need to treat it like a business, not like a thing that you are doing. Institutional trading is a business. You are managing money. And think of it like you have a retail shop. Does everybody here know ShopRite? Everybody here knows, if you know ShopRite, say yes. Say yes in the chat, ShopRite. A retail store. When you want to start doing any kind of business, you're going to have something that is called operating cost. You're going to have inventory. So you have to buy goods. After renting, you buy your products and you put it in your shop. You put it in your shop and you start selling it little by little. You may use 10 million naira to stock your shop. That's already operating cost. But even if you now sell Indomie, you sell Indomie, like one of these blue trade now is like selling Indomie. Oh, I made money. Let me quickly close it. If I close this money in profit, does it mean that I'm in profit overall? Yes or no? If I sell, let's say I'm shop right now and I sell cornflakes or I sell a carton of Indomie, and that's money, right? That's profit. Does it mean I'm in profit overall? It's a yes or no. Put on your business cap. You use 10 million naira to stock your shop and you sold a good of 2,000 naira. Even though the 2,000 naira entered your account, are you in profit overall? The answer is no, because you still have an operating cost, overhead cost, advertising, salaries. That's what we have here as drawdown. But guess what? They don't start screaming because there's an operating unrealized. You keep doing the business and keep raking the profits and reducing the drawdown. So you hear people cutting expenses, cutting staff, optimizing their stuff, reducing overhead costs. Over time, your drawdown should reduce. But is there any time that you will say you don't have drawdown? No. The only time you can never have drawdown if you are running a business is when you close the business. And this account, we are not gambling. This is our life account. This is wealth account. We are trading this account for financial freedom. I'm going to show you the 5-year projection, how you can take 10% per month and be financially free in 5 years. Financially free, totally. So I'm not intending to close any of these, even this one. I'm not intending to close any of these trades in a loss because they are going to reverse. They will reverse. And I will close them in profit. So by the time so what I do is I chip them off. When I see that the chart, if I see that this chart has turned around, I will close this sale in profit. I'll bank it in. It will show up in my history. All right. To show up in my history. Look at my history over the last 1 month. Can you see the profit? By the way, this is a cent account. This is a cent account. All right. So it's not somebody's already looking at which kind of money this guy just show. It's not a fluke. This is not demo. This is real. This is a real account. Can you see it? This is a real account. So it's not demo, but it's a cent account. So this is profit is 73,960 cents. So that's $739 profit that I've made over the last 1 month. How do I make those profits? It is the trades I'm closing. The trades I'm closing. Sometimes I close trades in a loss, right? Is a net profit. So if I see that a trade is too low, that before price will reach here, if I make a lot of profit, I can sacrifice 20% and give them. That's what you are seeing here. I made $302 in a trade. I can dash them $9. I want to forget about that trade. That's like doing Black Friday. Are you getting it? But I will never close that trade unless I've made the money back. And if I don't want to close it, I will leave it. And the ones I left are the ones you are seeing here. But I closed a bunch of trades. I've not had time. I closed a bunch of trades last week. That's why you're seeing all these revenue. They are small trades, $14, $5, $5, $5, $5. They are very small trades that I like, I beg, before market will get back to 1845, because we're in 2,300 now. I beg, I've made a lot of money. Let me offload. I made over $1,000. Let me offload $300 and keep $700. That's how I got to that. So I actually had $1,000 profit plus. It's my decision. I can decide to carry it. It's my decision. So do we understand hedge trading now? Do we understand drawdown? Type yes if you understand drawdown. If you understand hedge trading, because I want to go into strategy now. I want to go into strategy. But if you don't have this background, it will not sit well with you. I need feedback, please. I need feedback. I'm dishing out these things for free. I want to hear yes. I want to hear yes. If you now understand drawdown. If you have questions, you can type it in the chat. I will answer the questions at the end of the webinar, at the end of the workshop. All right. So you can make this profit every month. And that's how you are seeing this returns. 356 return. That's the first account. The second account. So can you see how my graph is looking? This is my analysis. This is my analysis of my account. This is the money I put in the account. This one. See deposit? That's the money I put in. Can you see it on September 2023? Can you see it? I deposited some money, I started trading it, and I was adding. Sometimes I throw money there, but you can see the account itself. Oh my God. If you understand this, you are free. You are free, totally. So let's go on. Let's go on to the strategy. So we use a moving average strategy. How do I know when to enter or when to come out? Entries and exits, we used a moving average strategy. This is what I said I'm going to show you how to set up when you join our community. You have to join first. I'm only going to show you to people who are serious, I want to learn. All right. Once you join the Discord, I will give you the links to see how to set up, and we'll walk you through how to set up your MT4, set up FBS, and set up the moving averages. We use not just any moving averages, we use the bankers moving averages. There are many averages you can use, but there are some particular ones that we have seen that the institutions are trading on. How do I know that the institutions are trading on those averages? Is because anytime price gets to those averages, like here, it respects it. Price gets to the average, it respects it. And weeks down, it respects it. And when it crosses it, I know that there's a signal we use to know that it has crossed. But if you zoom out, you can see that price is respecting this moving average. Look at this one. All these curves you are seeing on the chart, those are moving averages. Can you see how price is hugging? Price is hugging that average, hugging it. If it comes down to this yellow, it will bounce back. It's hugging, it comes down to the yellow, it bounces back. Comes down to the yellow, even stretch, reach this purple, it bounces back. So these are averages, and if price is moving, we know it's because the banks are trading at those levels. It's not my money that's moving this thing. So I want to align with where the banks are. I want to know when they are entering and enter with them and just ride the wave. Ride the wave before other people wake up. It's going down, you have already entered. And you know exactly when to come out. So I'm going to show you how to enter and how to exit. But I'm not seeing any comments. I don't know if I should keep going. I need your feedback. I need to know that you're following. There's a lot of information. I told you that it's going to be jam-packed, but I just want your mind to be here. I want you to soak it in. And then when we start trading on our Discord community, when we start trading together, it will all be clear. All right, it will all be clear. Okay, I can get some comments. We are following. All right, all right. I need, when I ask a question, I need us to answer so that, you know, this kind of internet, you can be talking to yourself for 1 hour, but I want to know that you're following. All right, so what moving averages do we use? The first moving average we use, okay, there are about 5. I'm going to explain 4, and I'll show you the golden one. So we use the 34 moving average. It's a simple moving average. I'll show you how to set it up. Very easy. 34, and that's like a first stop. So the 34 moving average is this yellow. That's the yellow one. Okay. This dotted one you are seeing is our golden average. It's our golden average. So I'll show you last. But the 34 is the moving average. So we call it a first stop. A lot of times price will go there and bounce back. Many times price will go there and bounce back. So it's a first stop, but price can still go through it. But just understand that if something happens, it may likely happen on that average. The 50 moving average is a simple moving average. You know, on the H4, that's the 4-hour chart. This purple is the 50 moving average. It's also very strong. It's very strong. If price ever comes down to it, it's likely to also retrace. If price touches, it's likely to retrace. And I showed you the 50 moving average. Look at it. You can go on and on and on and on and on. Look at this here again. 50. Price doesn't have to necessarily touch it. If it gets close to it, it can repel. See this one here, here, and here. All right, that's 50 moving average. We have the 100 moving average. 100 moving average is the blue, this one. Also very strong. In fact, there's something about the 50 moving average. If you go to the 1-hour chart, the 50 moving average on the 4-hour is equal to the 200 moving average on the 1 hour. So you see this 200 moving average is the same thing as the 50 moving average on the 4-hour. So it's also strong because some people are trading on the 1-hour chart. All right. Institutions trade on the 1-hour chart as well. So many times price may touch here and reverse. Okay. So, and when price gets to the 100 moving average, if I'm in profit, I will close my trade. If price gets to this, if I'm in profit, it's a good time to close my trade. It's a signal to close my trade. Okay. If price gets to the 200 moving average, is a no trade zone. I don't want to be in a trade when the price gets to the 200 moving average. Look at the 200, this one, the red one. If price drops here, I will close my sell. If price drops here, I will close my sell. If price is under it and it comes up, I will close my buy. Is a very strong reversal moving average. Price touches it and bounce back. Institutions are trading. That's how you know that the banks are using this thing, because when price touches it and it bounces back, like that pattern. Okay, so those are the 4 moving averages that we use. And then the 5th one is the 8 EMA. This one is 8 EMA, but it's not a simple moving average, it's an exponential moving average. All right. All these things, I just need to give you the figures to set them up. It's very easy to set up. If you come to F, right, you can see all the moving averages here. So I just need to click main window and come to moving average. Can you see it? And then I set it up as well. So that's how I got all the moving averages. So one is 34, one is 50, one is 100. I just changed the figures. See, this is the 100 and it's blue. Simple. That's all. So I'll give you the setup for all these averages. But the 8th exponential moving average is this one. It's the most responsive moving average, and it follows the price. So this one, it tells us when price wants to move in a direction. That's how we know. Okay, so you can see my chart. I don't have Fibonacci on it, Bollinger Band, stochastic, RSI. I just have the moving averages. And that's enough. It doesn't need to be more complex than this. Once you open your chart and you can see exactly where price is, you know exactly what to do, all right? And it doesn't need to affect your day. I don't want a cluttered chart, okay? I don't want it. I even changed my chart from red and green to black and white, or black and gray, white and gray, so that it's easy on my eye. I don't want too many distractions. I want to see at a glance what's happening, and I know what I want to do in 10 seconds. So those are the moving averages. So in addition to this, we use candlestick analysis. Okay. Candlesticks analysis is a 400-year-old trading strategy developed by Homa Munehisa, is a Japanese rice trader. Thanks, Abayomi. He says you are enjoying it. I'm also enjoying the session. I'm getting excited, as you can see. This guy is reputed to be the most successful trader of all time. 400 years ago, he's still more successful than most of us now. Because why? He developed this strategy and nobody else was using it. Can you imagine the edge? He created a strategy. It was so effective, but he was way ahead of the entire world. So he was the most successful trader because he had all the information. All right. And what is a candlestick? A candlestick is what you are seeing on the screen, this thing. We call it a candle because it has a body and has a wick or 2 wicks, just like your normal candle, but it contains pricing information. All right. So I can't go into details of candlesticks. This is not a beginner course. I'm sure most of you understand candlesticks, but if you are a beginner, you can check out, have a beginner course, Trading Fundamentals, where you can learn candlestick, what is a broker, what is a pip, what is and all that. Have a full trading fundamentals course that will give you the proper foundation. But that doesn't stop you from going ahead. So we use candlesticks in conjunction with the moving averages. So we don't need RSI, MACD, and all that, because all these things are lagging indicators. Price must have moved before your RSI will tell you, or stochastic, that, oh, it's oversold, it's overbought. You are talking about previous history. But I want predictive indicators that can tell me, that can give me an indication of where price is likely to go, what price is doing now. Candlesticks show me that exactly, what price is doing right now. I combine that with moving average, and then I make my decision. So the game changer is the 8 EMA. That's the last moving average I told you. This one, that's the game changer. All right, that's what tells us when to enter and when to exit. It tells us the right time to open the trade, and it tells us the right time to exit. It's all on the moving average. All the other ones give us indications, but this one is our major entry and exit indicator strategy, the 8 exponential moving average. I hope you guys are taking, are getting this. All right. So I've told you about the moving average. I've told you about the candlestick. I've told you about the doji. How do we, the doji is a candlestick. So that's why we use candlesticks, because I want to show you about the doji. What is the doji? When you see a candlestick that looks like any of these three things, price opens at a point, close, goes high, comes down, and closes at the same point or very close, it's a doji. So we have gravestone doji, we have long-legged doji, and we have dragonfly doji, depending on how they look, all right? But the doji is a strong reversal signal or indicator for us in this strategy. If I'm in an uptrend and I see a doji, I will close my trade. So if I'm in an uptrend and these are not dojis, by the way. This is a spinning top. Or let me zoom in. Okay, so I can take this as a doji, but it's not a perfect doji, right? But it's close enough. If I'm in an uptrend and I see a doji, I will close the trade. When you get a perfect doji, in fact, even the broker will tell you on the chart, it will show as green. So let me look for another place where I saw, let me look for a good example. Oh, that's a perfect doji. Look at it. When you see, you see this string, if you are in an uptrend and you see doji, exit your trade. I will exit my trade. That's one of our exit indicators. It means indecision. If you are going up and you now see indecision, what do you think? It means the trend is very likely to have been exhausted. It doesn't mean for sure it's going to reverse, but more often than not, the price is going to reverse or correct. So if I'm in an uptrend, a buy, and I see doji, once it closes, I exit my trade. If the price decides to continue after the doji, so you can see that all these ones are not really dojis. These ones are not really dojis. You see them, right? Even though price, yeah, but it's not like, see the doji, see. Price can still continue above the doji, and I'll talk about that later. There's a way we can re-enter, but at least take your profit. This trend is exhausted, and then you can reset and look for another opportunity. Let me see, look for another doji. See another doji here? Can you see it? This one. See one here. See another one. Uptrend. See doji. If you thought you were in this trend, say, it's already going up, you now bought, and you saw doji, okay, close your trade. That trend is not going anywhere, most likely. And if it decides to go, then you can enter at the appropriate time, which I will show you. Are you seeing it? So we have the doji that tells us when to, if I see a doji at the bottom of the trend, like this, bottom of the trend, I don't respect the doji. I ignore it. If I see doji at the top of the trend, I will close my trade. But if I see doji at the bottom of the trend, it's not as powerful. Gravity is more powerful than uptrust. It's more easy for things to crash, to come down, for price to come down than for it to go up. So if I see doji at the top, I exit. Okay. So you can see another doji here. All right. So that's good about doji. So let me give you an example now. Let's talk about entry strategy. Let me talk about entry strategy. These triangles you are seeing are what we call fractals. Fractals. You learn about them, but it just helps you to identify a swing high. If you are very knowledgeable in trading, you may not even need to see the fractals, but it's just good for visual, visual clarity. Like you don't need to guess. So, like the doji I told you, if I saw a doji and I close my trade, where are those my examples? If I see a doji and I close my trade, all right, and a fractal forms, if price goes back and crosses this fractal, is an indication that price is now going back up. So I will wait until price crosses the fractal. All right. So how does a fractal form? it's like it needs two candles, smaller candles on the left, smaller candles on the right, and the fifth one is the fractal point, is the inflection point. So you need two lower candles. Every time you need 5 candles to form a fractal. So 1, 2 must be lower, 3, 4 must be lower. Look at this one, 1, 2, 3, 4. 1, 2, 3, 4. That's how you fractal. So your eyes can recognize it, but it's easy if you just mark it like this, and in 10 seconds, you know what to do. Okay, so let's talk about this trade. When the second, this is the entry strategy now. I'm in strategy now. So pay attention. Pay attention. When do you enter? When the second candle, we are counting consecutive candle. That means 1, 2, 1, 2. When I get the second candle opening above the 8 exponential moving average is a sign for me to buy. So you can't get this example. This was 10th of January. Okay, well, let me just use a price was coming from under here. First candle opened, first candle opened, second candle opened. That's my entry signal. Let me show you on the chart. Let me show you on the chart. Okay. Now, you see, that's why I said that some of you at the end of this course, you may be able to enter a trade. Okay. So if you are looking at the chart now, this is the 8 exponential moving average. A candle, this candle, where did it open? You see, this is the open, this is the close, right? This is the open, this is the low, this is the high, this is the close. So this candle opened below the 8 exponential moving average, and it closed above it. Can you see that? It's very straightforward. So what we are looking for is the second candle that opens above. So if this candle closed above, this one here is the first candle that opened above. It's very simple English. All right. So when this candle closes, the second candle that opens above is my entry point. I need to count 2 candles that have opened above the 8 EMA. Okay. So don't mind this. It's trying to become a gravestone doji like this, right? But I'm just using it to explain. So let's go back and see where we could have entered. So price came like this. See, price was doing blah 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 blah. See this one. This price closed here. Okay, this was even a gap. This one closed here. So this one gap that opened under. Can you see it? First candle that opened under, second candle that opened under. Can you see where I put my sell? Can you see where I entered my sell? Why did I enter here? Because I counted 1, 2. As this candle opened, I entered the trade. And I'm writing it down. I'm just explaining entry to you. Let me look for another one. Let's zoom out. You could have been in a trade here. Okay, let me go down to where this trade actually started. So let's say there was some rumble jumbo here. I'm looking for a clean setup so you can understand. Let's say price was doing up and down. So this white candle open. This is the first candle that opened above, second candle that opened above. You enter here. You could have entered here and ride the trend all the way up. Even though the price, this is where you could have come out. First candle open below, second candle open below. So you could have exited at this point. when the opposite happens. When the second candle opens below, you exit. But I want to show you how much you would have made from here to here to from here to here. How many pips is that? 1,600 pips. 1,000. Just you open your phone, you check. A second candle open. It does not open. You go back, continue your work. By the time you are closing the trade, 1,600 pips. If you wanted to exit with a doji, and you say, okay, I beg, I've seen doji, I want to exit. No problem. You saw doji here. You could have exited here. Right here. But that's not even a doji, but that's still 1,000 pips. Okay, right here, this one. 926 pips. And what would you have done? You would have waited. Price, you thought price may reverse. It didn't reverse. It kept going up. You see it? So at the above the doji, I could enter, or I wait for a fractal to form. And when price breaks that fractal, I can enter. And it will come. This one candle open above, second candle, you could have entered a sell here. It would have gone against you, and you leave it. You leave it as a dollar cost average trade because the price is still coming down. So let's go back to our slide. How do we enter? When the second candle opens above the 8 exponential moving average. That's how you enter. Anytime you see it, so open you are sleeping, you just open your phone. It's 4 o'clock. As the second candle open, no, close it. Another 4 hours, your alarm, open it. As the second candle open above, no, you close it. That's how we do it. All right. So when the second candle opens below, like in this example, that's when if you are in a buy trade, you close it. If you are not in any buy trade, you can enter a sell trade. Or you can close your buy and enter a sell. So that means the uptrend has finished. Now we are going down. You enter sell and you ride it down. That down you are riding can be another 400 pips. No stress. So when the second candle opens below the 8 EMA, you will close the buy only if it's in profit. If it is not in profit, just leave it. It's dollar cost averaging. It's DCA. So you close your buy and you enter a sell. So let's look at an example. Okay? And this example will drive it home for you. So I was watching the chart here. So let's see. This one opened under. This is the first candle that opened above. This red is the second candle that opened above. Can you see it? This green candle is the first candle that opened above because the previous one opened below. So this one opened above, closed here. So this one is the first candle. This red is the second candle. I may decide to ignore this red that is too small. Let me wait for another signal. Was this one opened, I can enter. So I entered a buy, thinking it's time to go up. And this explains dollar cost averaging for you too, and hedge trading. But the price didn't go up. The price started coming down. Can you see it? So the price started coming down. So first candle opened below, second candle opened below. What would I have done? You know, by the time this second candle opened below, my buy is already in negative. So if I was lucky that it was in positive, small positive, I could have quickly closed it. But let's assume that it was negative, and I will never close the trade in a loss. So what I would do is, if this was 0.01, I will open a sell of the same 0.01, and I will start writing this one down. Can you see? First candle opened, it went back. Started touching the 34 moving average. Followed it down up to this point. And guess what? Started reversing. So where the first candle opened above, this red is the first candle that opened above. And this is the second. This one even now went under. So once you cannot count 2 candles, you stop counting. So the price came down, you know, this red opened above, but it went and closed under. So that one don't spoil. You wait for another time. So this green opened first candle above, second candle. At this second candle, it's time for me to close my sell trade. Can you see? It's my exit strategy. It's my exit for my sell. And it's my entry for my new buy. So this, my first trade, is in loss. But my sell trade, I've closed the profit. I don't keep on in my account. And I now enter a buy trade. Immediately, I close the sell, enter a buy, anticipating that the price is going to go up. So that just my DCA, remember the example I gave you? Price will go up, and then this one too eventually will become profitable. So that's what this example was giving you. That small sell trade that I showed you, writing it down, is 326 pips. You know what it is to make 326 pips? You could have done this in, this is like maybe 1, 2, 3, 4, 5, 6. So this is like 4 days, 5 days. This is like 5 days. You just left the trade doing your business. Imagine for 5 days, you didn't have to do anything. You're just checking every 4 hours as the second candle open. Oh, this one opened 1, but the second one did not open. By the time the second candle opens, you close your trade. You don't need to look at how much it was. It's not about this place. It's not about this place. It's about this place. It's about the chart. So 326 pips, you bank it. But what now happened? You know, we closed the sell and we entered a buy because we think it's going up. But the market did not now go up. The market still went down again. So my first buy that is up here is still negative. I've made profit. My second buy that I entered here also is negative. That's the dollar cost averaging. If the trade goes against me, it is a DCA trade. It's dollar cost averaging. I convert it to dollar cost averaging. If it goes in my way, I will write it like this sell and close it. But if it goes against me, in my head, I convert it to dollar cost averaging. I will calculate it later. Leave it. So what happens is, when I see that the price is changing, I will wait for second candle to open up below. That will confirm that we are now going down. We are going down. So what will happen? Once I confirm that second candle opens below, I will enter another buy trade and sell trade now to write it down. I'm just reacting to what the institutions are doing. They are the ones that move the market down. So if they say we are going down, I don't need to fight with the God. Look them. I go down. All right. So that's this point. So I enter a sell trade and they pushed it down. They pushed it down and then it started turning back again here. So first candle opened above, I start counting. 1. Second candle opened above. 2. I exit my buy trade, my sell trade. This is my second sell trade. Going down, I exit it. That second sell trade that I just did, which was a hedge, because the price went against me. Can you see? I've already made 72 pips. And what happened when this price, second candle open, I closed this sell trade. And what did I do? I enter a buy immediately, anticipating that the price will go back up. And that's how we keep entering this trade. But you see, you have to size the positions appropriately. If you use 50% if you use 10% of your account on one trade, how many DCA trades can you do before your account will blow, before you run out of margin? So you have to use proper wallet management. And I will teach you how to do that. You know, that's why I always tell people, start on 0.01. Start on the lowest lot size. Don't think about profit yet. Master the strategy. When you are seeing, when it clicks for you, then you can start increasing your lot sizes up to the point that your emotions are now, then you can now relax. So I have 2 trades. The first trade that went negative, the second trade that went negative. Those 2 buys, they are minus. And I have a third buy now. So the first buy, it went against me. The second buy I enter here went against me, and the third buy. So 3 buy trades are open now. This is dollar cost averaging, because I bought here, I bought here, I bought here. Now, what happened next? We wait for the next move by the bank. Okay. And if I go back to this place, this was June, you will see that eventually the price retraced and went up. All those 3 trades, let me look for it. I don't want to waste time. We're approaching 2-hour mark, but I'm enjoying the class. So let me go to July. Yeah, that was right here. Let me see. Yes, that was right here. This is the chart. That was the first trade. Yes. This was the first trade. So let me go back here. You can see it. This one. That was this place. So first buy trade, second buy trade was somewhere here. Where's my and the third buy was somewhere here. But what happened eventually? See, this trade, all the 3 trades became profit, and you would have exited at the first doji. You could even close some here, and you could have exited right here. Can you see it? Or you wait for this one. I'd have exited even by here. Seeing all this, right? So at the end of the day, you will make the money. But because we are not paying any swap fees, you can wait. Leave the trade. If it's open for 5 years, no problem. Your account is growing by the day, and eventually you will close it in profit. That's the idea of DCA trade. Okay, so this is an 8 out of 10 strategy. Doji at the top is 8 out of 10. 8 out of 10 times, when you see doji at the top, it's going to reverse. If you say doji at the bottom, you ignore it. All right, you ignore it. Okay, so I talked about candlesticks. I don't, apart from the doji, I don't really trade on the candlesticks. So you can learn this one. Just go to Google and search candlesticks, or check the training fundamentals course. I explain these candlesticks in more detail, but it's just for us to understand what's happening. This is what we call price action. Price action. So just check them. They are self-explanatory, but the doji is the primary candlestick that we use in our trading. All right. So did you guys get value today? Have you gotten value so far? If you got value, let me know. Let me know in the chat. We are approaching 2-hour mark, and we are about to shut down the webinar, but I want to give you guys something. I want to give you guys something. I don't want to leave you. Let me know in the chat. We have a couple of people, 8 on the call. Type yes. Olaiwala says yes. Jess, Bright, Ayla, Julius, who else? Abayomi. Did you guys get value? Awesome, 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 awesome. All right. Now, I've given you my entire strategy. This is what I'm using to make 10 to 20% per month. 10 to 20% per month. Every month. And for those of you that stay to the end, I'm going to give you, don't go. Please just wait. Don't go. I'm going to show you something that will make this thing click for you in your head. It may click in your head, but maybe in your heart, it has not clicked. I'll show you something that will make it click in your head and your heart. The 5-year plan. I want to show you the plan that I am on. All right. And I have people that are following. I want to put you on that plan as well. So, I'm going to invite you guys to join the Smart Money Masterclass, where I'm going to be teaching this in detail. So you can join my group for free, but my inner circle is those who I call smart money managers, who are already trained by me and mentored. It's not just, you have this, you can use what I showed you right here. You can use it to start making money. I've given you everything, actually. The only thing I'm not giving is my experience, you know. But if you join the Smart Money Masterclass, will take you through the concept in detail, and then you have access to the lifetime mentorship from me. So we trade together as a family. Trading can be very lonely, but when you're trading as a group, you have confidence that you're doing the right thing and you can learn faster. So the Smart Money Masterclass, I'll give you guys the link to join that at the right time. So I'm actually doing a live class. I do the class once every month. So the next one is 18th of May. The last one was last Saturday. The next one is 18th of May, but I'm going to give you guys a better deal. That's my live class is 18th of May. So once a month I do that. But this is what the Smart Masterclass entails. You get all the videos, how to read a chart, like I said, the candlesticks, the doji, the moving averages, how to know where the institutions are buying, how to hedge trade, go into more detail about hedge trading, some tips and tricks about hedge trading, the correct lot sizes, how to manage your hedge and all that. Trading without a stop loss, without a take profit, 200 to 400 pips per trade. So everything we've seen today, we go into detail, and then you have direct mentorship as we go on, and you can start making 30 to 50% profit every day. All right, this masterclass is valued at 497,000 naira. If you get this information, you are free. Like, you can make $1 million, and I'll show you guys how you can make $1 million in 6 years. You can make $600,000 in 5 years. I will show you now. I'll show you my account. I'm showing you the plan. Okay, and you are trading a few minutes. That's the best thing about this. Only a few minutes a week. You never blow an account, and you can trade it consistently. You have access to the trading community, all right, both local and international on Discord, and you have real-time guidance. The chart says it's time to buy, but this candlestick I'm seeing is a doji, and my lot size is this, and I have a drawdown of this. What do you think I should do? This is what I want to do. Does it make sense? Or you see what somebody else is doing, and you can say, oh, so this is how I would manage my account in this situation. So they have motivation. We have weekly Q&A calls. All right. This is worth 297,000 on its own. This is just the mentorship on its own. All right. And you have access to our Discord. So only for this workshop, the total value is 794,000. But only for this workshop, I'm going to give you 100,000. But wait. As I told you, calm down. Wait. My monthly workshop is 300K to enter. 300K, because I know what I'm giving you. I know what it's doing for me. All right. But for this workshop, for the people that join this workshop, for you seeing this, it's 100K, and it gives you lifetime access. This offer ends on 30th of April. So look at the disparity, 794 to 100K to learn a lifetime skill. Okay, so this is the link. I'm going to give you guys a generous discount, and then I'm going to show you the 5-year plan, and we'll end the Zoom. Is that okay? So this is the link. So go and check the details. If you go there, you will see that the price is higher. So keep that link, or click it and open it down on your browser, okay? Or copy it somewhere. If you click that link, you will see that the price is actually higher, but I'm giving you guys an early bird advantage, even below the 100K that I told you about. All right, so if you get started before April 30th, April 30th is about 5 days. You can pay 50K, and you can have full access to the mentorship, to the course videos. You can always go back and watch the videos, you know, if you want to clarify something and all that. Okay, so the question I need to ask you, have you stopped blowing accounts? Are you still blowing account? I mean, can you see how far we are from blowing accounts? We're not even talking about we're not talking about how to make money in forex. We are saying how to make wealth, build wealth. That's what we are doing here. There is no my stop loss, I lost 10%. There's none of that. There is none of that here. But some people, are you still blowing account? Is that where you are? Or have you migrated? Have you migrated to profit, consistent profit? Have you ever made 350? If please be answering this question for me in the chat. Have you stopped blowing account? Yes or no? If it's no, type no. That means I'm still blowing account. I've not stopped blowing account. I still blow. Maybe you still blew an account last week. Type no. Answer the question. Have you ever made 300 pips profit or 400? My biggest trade has been, I made 600% pips, 600 pips rather, on the trade. Are you set to retire in the next 3 to 5 years? Bright, Jess, Mr. Julius, Olaiwola Sakiru, Abayomi, are you set to retire in the next 3 to 5 years? Yes or no? Sometimes as Africans, we are not brutally honest with ourselves. That's what the white man has over us. You are like, yeah, you go better, you go better. What plan do you have? If you continue what you're doing now, will you be able to retire? Or even if you don't retire, be financially free in the next 3 to 5 years? So I've cut off an extra 50K for those of you that stayed to the end, but it's only available for 5 days. So the link I gave you, rush there, make the payment, and then I will end by showing you the 5-year plan. I want to show you the 5-year plan because I kept it to the end. If this does not motivate you, then I can't help you. What I want to show you now, if it doesn't motivate you, I can't help you. All right. So click the link. Okay, you need the link again. That's the link there. So basically what you need on the link is the account details so you can pay. All right. I'll also post the account details on the group. So I believe you all have my WhatsApp number, or yeah, most of you should have my WhatsApp number. So that's the link. That's the account details. Inworks Media Limited, Providence Bank, and that's the account. Make the payment and send a proof of payment to that number. So let me talk about the 5-year plan so that we can end. Remember, I said you have something like a drawdown. It will always be there, but at some point you are going to be in net profit, and it become exponential. So let me show you this. Follow me very closely. I want to introduce you to a particular website. Some of you, this website will become your friend. This website is one of my best websites now. When you are bored, go to this website, spend some time. You will become motivated. When you are depressed, when Naira, petrol cost, electricity tariff, when they hit you with all those things, so you go to the calculator site, go to finance, and go to compound interest. Okay, so that's it. So it will bring you to this page. I want to show you a simple calculation that will change your life. This calculation changed my life. Most times, forex traders, we don't have long-term perspective. No long-term view. Is how much I can make this month. You've not thought of how much you can make in 1 year. Okay, so I trade for freedom. I have my business, and I recommend that if you want to be successful in forex trading, go and get a job. Don't try to eat from the forex trading yet. Go and sort out yourself so you can allow your account to grow. When your account, if you have $1,000, that's not the account you want to be eating from. It's too small. How much do you want to make per month? That will be, is it, even if you make 10% per month, that's 100K. What do you want? Is it 100K you are going to be eating on? But if you are able to make 10% per month and do that for 3 years, let's see how much your $1,000 will become. So let's assume you start with $1,000. In fact, I recommend you start with $1,000. If you don't have $1,000, start with what you have. There's no excuse for not starting. But if you have it, start with $1,000. It will give you the seriousness that is needed. But we are using the lowest risk possible to start. So that's not a problem. And we can't blow this money. You can't blow it. Put it in dollars. Take it away from your Naira. Put it in dollars. Put it in your forex account. We are going to become a smart money manager. So here's what's happening. If your money is in the bank is going to give you 6% interest, right? Let's see. 1,000, 6%, 1 year. At the end of 1 year, how much have you made? You've made $61 total interest on your $1,000. You made $61. The bank has made like maybe $10,000 on your money. They give you 6% and you're happy. Whereas inflation is 30% in Nigeria. I didn't come up with that figure. It's from the Central Bank of Nigeria. Go and type it on Google. Inflation rate in Nigeria is 29.9%. If you do this for 5 years, you don't touch the money. How much do you get from your bank? 30% in 5 years. Or 34% in 5 years. When inflation is doing 30% per year. Can you see that it doesn't make any sense? Guess what? If you put your money in an investment in Nigeria right now, you are getting 15 to 20% a year. Let's assume you get 20% a year. Right? A standard investment, a good investment is real estate. They do that. 20% a year. Guess what? Inflation is how much? 29.9%. So even with your 20% a year, you still lost 10% of your money. Your 1,000, you made 20%. That's 1,200. But the value of 1,200 is now $900. So in essence, you lost 10%. That's what happened. So you can't survive and build wealth with 20% a year in Nigeria today. And it has been like that for donkey years. So what's the solution? Is there a way that you could do like 10% a month? Is it possible? Is it possible with what you know now? Is it possible to do 10% a month? Please give me an answer. Type yes, yes, yes. If it's possible to do 10% a month on your money. From what I've shown you proof, I've shown you the strategy, I've shown you testimonials, I've shown you my own account, FX Blue analysis, where I'm doing 10% a month. Where is it? This one is 22%. Where's the other one? This one is 12%. Real account. Can you see last update was 10:30 this morning. So it updates in real time. I'm doing 12% here. So what if you did 10% per month and you didn't touch the money? That's the point. This is not your rent money. This is not school fees money. This is not feeding money. This is financial freedom money. If you don't have the capital, you will learn to do it. I've taught you DCA. Take a percentage of your account. If it's 50K per month, this money is for my financial freedom for the next 5 years. and I'm putting this money into my forex account every month, because I don't have capital. Start where you are. If it's $50, you have start. If it's $20, start. But if you have capital, there is no other thing on the planet that can give you the returns that this plan can give you. So let's look at the 1-year plan. In 12 months, your 1,000 is what? $3,000. It took you 8 months to double your investment, to double your capital, rather, not an investment. You are trading the money yourself. It's not with me. It's your money, is in your account. You are the one trading it. 8 months to do 100%. In 12 months, you've done 213%. Look at the breakdown. This is mathematics. See the balance increasing every month. From the 10th month, you've done 2,500. And the 12th month is 3,000. Because you're not touching the money. It's a good time to take profit, right? But watch what happens the next year. Because you didn't touch the money. Your 3,000 in the first year is now 9,000. That same money is now 9,000 the second year. That's times 3. Can you see that? Let's look at 3 years. $30,000. This is about 30 million. From 1 million to 30 million in 3 years. Spending 5 minutes a day or 10 minutes a day or 15 minutes a day max. How many times do you see me opening my phone? I only open it every 4 hours. What happens in 5 years? In 5 years' time, your 10% per month. You know, I didn't use 20% like I'm doing. I use 10%. Your 10% per month has given you $300,000. This is 300 million. Look at the breakdown. It's there. Because you didn't touch it. Year 1, year 2, year 3, year 4, year 5. Okay, these are the end of year 1. At the end of year 2, year 3, year 4. At the end of year 5, you have $300,000 in your account. You are free. If you decide to remove 100, and this is not money you want to remove and go and buy cow. It's not the money you remove to go and buy a car. This money is for financial freedom. If you join the program, I will show you how this money becomes your financial freedom. That's beyond the scope of this training. But I wanted to show you the 5-year plan. In short, I'll give it to you guys for free. Let me show it to you. I'm giving you as a finance expert. If you want to be financially free, you need something to give you in Nigeria, all right? Let's say around 10%. You put your money in a cash flow asset, like real estate. You see that money you're putting to buy real estate, to buy stocks, to buy all those things, treasury bills, bonds. You need to keep it. Don't invest yet. Accelerate the money first, like what we are doing. Accelerate it, multiply it. When you multiply it like this, you can take $100,000 and go and buy real estate. And you are not buying house in Banana Island. You are buying cash flow real estate, commercial real estate. You are buying assets that give you money, not assets that are just be increasing. But no, this asset must produce money every month or every year or every quarter. Must give me cash. It's cash flow assets. If you are buying stocks, you are buying dividend stocks. Stocks that pay you every 3 months. They pay you dividend, cash flow, cash flow. If you are buying, what else is there again that you can buy? You know, real estate or stocks or whatever. If you are buying land, it must be land that you can lease immediately and be collecting lease payments. That's cash flow. So you need about 10%. You need your asset to give you 10% per year. General. You know, in Nigeria, I said if you invest, you get 20%, right? but I work with 10%. I work with 10% to be on the safe side. So if as a married man, let's say I spend 250K, let's say I spend 300,000 per month on my expenses, all my expenses, my rent, school fees, children's school fees, eating, transportation. I'm giving you guys free. I charge serious money for what I'm giving you now. Serious money. My personal wealth academy is, I don't even say the price outside. All right, but it's in millions to teach this. So pay attention. If you spend 300K per year, 300K per month, that means in a year you spend 3.6 million for your expenses, your lifestyle, everything. That means your investment, the investment you are trying to build for financial freedom, must pay you 3.6 million every year. If you can buy something that pays you 3.6 million every year, you are financially free. If you agree with me, say yes. Because the cash flow you need to survive without lifting a finger is 3.6 in a year. So your investment must net you 3.6 million per year. That translates to 300,000 per month. So if you need 3.6 million per year, right, you divide it by 10%, and that gives you 36 million naira. That means you need 36 million naira worth of assets that will pay you 10% in a year. I'm talking about financial freedom now. If 36 million assets, you buy a block of flat, 36 million, the rent you get from it is 10%, something like that, 3.6 million in a year. That will cover your monthly expenses. So guess what? Why can't you take $36,000 out of this money after 5 years, or after 4 years, or after 3 years? I may not want to take it after 3 years because my money is exactly that. But I may want to build it. I may want to build it to 4 years. Or between 4 and 5, I may say, let me just give it 1 more year. In 5 years' time, I can buy assets. I can take 100 million out of my account that will be giving me 10 million per year. And that is 800K per month, 830K per month. You are free. Is this making sense? That is the plan. Oh. It's not for you to make money next month and no, that is the plan. All right. Now, here is the joker. If you follow my advice, be disciplined and add money to your account every month, even if it's $50 from your salary. Be disciplined about it. It's your freedom. I want to accelerate my freedom. You start with 1,000 and every month you add $50. It's your savings. Why are you saving in the bank? Add it to your money where you are managing it. Nobody is smarter than you. That's what was supposed to be 300,000 becomes 456,000. Your total deposit, all the $50 you are putting per month, it amounts to $3,000 after 5 years. That's 3 million. Your initial was 1,000. So total you put in 4 million or $4,000 and you have 456,000. This is the 5-year plan. All of you, that's why I put you in a group so you can watch. I post my testimonials. If you're on my Telegram, I post my trades on my Telegram. I tell you when I take profit, right? See the profit I took. This was when? April 24. That was yesterday. I'm analyzing my trade so you can follow it. You will be here, you will see it. All right. When I withdraw out of the account and all that, you will see it. So that's the 5-year plan. So we've taken so much time. Let me know if this was instructive for you. All right. 50,000 naira once, and you will never see this at 50,000 again. Trust me. It was this morning I decided to do 50K for the first. I know that is the first. I'm just launching this workshop series in Lagos. We've been doing this internationally with Alan and other African countries, but we're just starting to focus on that. I'm starting to focus on Nigeria. So I brought it down. $50,000 Naira once and potentially make 600 million in 5 years. If you decide to add $100 per month, you are getting 600 million in 5 years. Many of you can do, if you're making 400K a month, you can save 100K. This is for freedom. You can save. All right. So to enroll, go there. I've given you the account, make the payment. I'll give you access to the course, and then you can start making money. So thank you so much for joining the webinar. Do we have any questions? We are well over 2 hours. If you have questions, let me know in the chat. Questions about enrolling, questions about the course, the program, let me know so that we can call it a day. So do you have any question? Abayomi, Bright, Jess, any question? Who is signing up? Who's ready to sign up? Who's ready to sign up?